Gracias. Hi. Thank you. So, like Eduardo said, I'm David Pacheco. I work for Mortgage Intelligence, and we actually own the franchise, the Mortgage Brothers. I have my brother Daniel with me, right in the corner, making sure that I'm doing the right thing here. And anyways, so let's talk about mortgages. I remember when I started thinking about becoming a broker and saying, like, mortgages, how boring is that, right? Because I actually I specialized in business. I did business administration, and I specialized in marketing, and I had nothing to do with finance or anything. And years later, here I am working on finance. But over the years, I realized that Dave has a great presentation. He obviously talked about a great opportunity in Nova Scotia. After, obviously, we're going to have Naun telling us, how do we convert these duplexes and, the construction part. And we have to have the paralegal as well, making sure, you guys are protected. And, Ed is always going to talk about, hey, this is the opportunities and show you the houses. But there's one thing. If we don't have the money, we have nothing, right? So show me the money. That's, I like to call myself and our group like the mortgage option person. I know a lot of people still works with the bank, so I just want to kind of go over, what's going on? Going back. Yeah. All right. So let's talk about working with a mortgage broker. I know some of you still go into the bank and working directly with the bank, and the big difference in working with a broker instead of working with the bank is that the bank is one option, and we have over 50 options for you. The person at the bank does their job. They need to protect the interest of the bank. And it doesn't matter if it's your brother, your sister, your uncle, your best buddy. They have to do their job. My job is to protect you, because you win, I win. I work by referral, and I want to make sure that I'm doing the best job with you, so then not only you buy the property right now, but also you're going to have to renew the property. You're going to have to refinance the property. So one client for us means a lot of transaction. So want to make sure that we do our best. So anyways, what I was talking about is number one is choices. There is over 50 lenders. There is obviously the big banks, but then the 10 big banks, Scotia, TD, CIBC, RBC, and all that, which are great. We work with some of them. It seems obviously Scotia and TD being our biggest partners, right? And they have obviously the options there. But what if you're not a conventional client that doesn't fit their boxes, right? Because at the end of the day, now with all these new rules, it's all about fitting the bank boxes, right? And having choice, there's different obviously opportunities that we can see for you. And again, like your bank shows you their products, we show you every bank's product, right? So depending on your situation, we want to make sure that you are fit into the right place. And obviously, some of you, I've seen it in my office, and there's a lot of paperwork that we need to sign. I want to make sure that you know exactly what you sign. Like number one, that the mortgage is portable. Number two, that there's no big penalties. There's nothing hide behind what you're signing to kind of we want to make sure that we empower you to keep refinancing, to keep buying, to have the flexibility. Sometimes people focus on the rate, and some people call me and say, "What's your rate? What's your rate?" We have options, so we are confident we're going to get the best rate. But it's sometimes, and most of the time, it's not just about the rate. It's about the flexibility that you have. Like you're able to, again, refinance, renew the mortgage with no hassle. Right? And again, there's many different things that we can do there. And again, like we deal with over 50 lenders. We deal with them, but we work for you. Okay? So again, if somebody comes from the bank I always like to say, like, if the bank make the mistake and give you something good, I'm gonna tell you, and I'm gonna say, you know what, the bank is a really good option for you. But 99 out of 100, I know we can do better because we can show you the option. And again, if somebody's working with another broker, for example, that's when experience comes in place. We've been doing this for 12 years. Danny and I, we have combined almost 20 years of experience on this. And trust me, every single year, they're changing the rules. So being on top of it, like we don't sell life insurance, we're not financial advisors, we do mortgages. We like breakfast, lunch, and dinner, that's what we eat every day. It's mortgages, mortgages, and mortgages. That's what we focus on, right? And again, having the experience makes a big difference. Somebody comes, like nowadays, especially at the branch level with the banks, there's so many new people that are coming into the workplace that they're getting trained. So you want to make sure that you get someone that has experience, right? Because that's gonna save you thousands of dollars. And we want to make sure that whatever we know, we give you, right? Now, this is like general rule. There's 3 things I always talk about when I get together with the clients. What do I need to apply for a mortgage? And these 3 things, it's not like one greater than the other one and so on. Those 3 has to come together as one. Obviously, your income, how much you're making, how much can you prove, if you're self-employed, if your gross, your net, right? If you part-time, are you guarantee hours and all that, right? So the income is very important. So we want to make sure that, I tell all my clients, give me all the information that you have. I need to know all your books to see exactly what I need to use to benefit you. So then, we always like to say that, I imagine I'm kind of like your lawyer in front of the bank. If you have an issue with someone, you tell your lawyer everything, and the lawyer is going to pick what he needs to tell the judge, right? Exactly the same way, we're going to review your full documentation, and then we're going to see what's the best that we need to present. At the end of the day, like my goal is to tell the bank, it's like why they have to give you the mortgage, why you're the best client for them, right? And then they're gonna say, okay, then that's why they will give us not only the best rate, but the flexibility and all that. Now, number 2, and I put that on red just because it's the credit, and I'm gonna talk about that in the next one, and obviously the down payment. Now, the down payment is also called the equity on the houses that you have, that you can refinance it, and I'm gonna go in details on that. About how you can take your equity out of your homes so you can actually buy more properties. I have clients that in the last 5 years, they have bought 1 property a year if they follow what we told them to do. To keep on their income, to keep up on your credit, and obviously we can work with that equity that you have. Especially as you know, like properties here, and especially in this area, they're skyrocketing right now. And they will continue because there's new construction, there's new development, and all that. And again, on this types of rules, that we have the regular lenders, what we call it the A lenders, which are the big banks and the regular way that we do mortgages. And there's the B and the private side, which they're way more flexible with your income or with your credit or with the amount of down payment that you have. Now, income. Like some people are like, okay, I do have a full-time job, and then the bank is like, oh yeah, I have a full-time for 2 months, and then you go to the bank, and the bank say, oh no, you need to have at least 1 year. Well, depending. If you're a professional, you've been doing this, been in the same industry for many years, we can get an exception and get it done as well, right? So, like that's why we like to see the full picture, right? So then, what have you been doing? What you've been doing before is very important to know. Part-time, a lot of part-timers these days, right? Are you guaranteed the hours? How long you've been in the job? You've been there for 2 years, then we can take the average of the last 2 years. If you're seasonal, right? You only work during the summer. Again, is that guaranteed those hours? Or you're casual? Now, the other side is the self-employed. And a lot of you guys are self-employed as well. If you're an investor, you're considered self-employed. So you could be having your 40-hour job and also your houses. So you consider both. You consider an employee, that you work your regular hours, and you also consider a self-employed, right? So what is your net? What is your gross income and what is your net? And again, there's programs for self-employed that they're amazing that, a lot of the banks, they don't have access to. The A lenders or the B lenders or the privates will actually take that income and use it towards you buying another property. And obviously we need to work together actually with your accountant to make sure that, at the end of the day, it's not just about, again, I was saying about the rate, is because if it's an investment property, you know that you get, as part of your investment, so you can actually use it as a tax write-off. Okay, so credit. I talk about this a lot because actually credit is kind of the central part that's going to depend if you qualify or not, right? If you really, it's not only having the excellent credit, the beacon score, that's what they see. That's the first thing that they see. You can have a great beacon score. Everything is paid on time. And you can have up to your nose on debt. And that's the number one issue now in Canada is the amount of debt that people are getting into, right? People live paycheck by paycheck and then they reach to their credit cards to kind of compensate what they don't have, right? And like I said, it's not about just having the excellent credit because everything is paid on time, but then you're in so much debt. Now there's good and bad debt. A good debt, mortgages is a debt, but it's a good debt because every year your properties are going up. But I just want to talk about how many people, and I want you to be honest, have a car loan right now, right? Okay. How many people has more than $500 on the car loan? Pay more than $500. Pay more than $500 on a car loan. Okay. So it's the easiest thing to do to get a car. And I usually, my kids joke around with me and they always say, Dad, when are you going to change your car? And I say, my car looks and drives like new. So when that thing blows, I'm going to let it go. Before I was a broker, my goal was I want to have a Porsche one day, right? Then when I started having properties and how everything works, it's you know what? Car is a commodity, right? The car goes down every single year. I don't know a car that goes up in value. Back in Peru, I remember you used to buy the old car and fix it and paint it and make a little bit of cash, and no, that doesn't work here, right? It goes down every single year, right? So, it's not like you have to buy an old car and drive that, right? But I've seen a lot of clients coming into our offices, and I seen a client with a Porsche one day. He's paying $1,500 a month. So I'm thinking that you want to invest, you're driving your car away, your house, right? And again, it's so easy. I can just go to the Porsche dealer, sign, and get a Porsche tomorrow. Would I do it? No, because I know how it works. And this kind of illustrates what you're taking away your buying power. $500 a month takes away $110,000 on a mortgage. So if you're paying $500 a month on your car, that's what you're taking away. Now, my biggest issue with these car loans is that they're so easy to get and it's a signature. But if you're making $30,000 a year and you're driving a $50,000 car, there's an issue. You always, it says like your car value, you should time 10 times that, and that should be your annual income. So if you're below that, which I'm sure that the majority, if you're an investor, you know how that works. But you know, you probably have friends or your kids, your family, tell them that. You know, $500, I have, the number one decline reason these days are car loans. No bad credit, not that the person have enough equity in their homes. There's lots of equity. People can show their income. But then, like I said, like if I have the person, again, $30,000 a year driving a $50,000 car, that person is not going to buy a house in the next 4 years that it's going to be paying that loan. And like I said, like it's like credit card is like karma, right? So you enjoy it now, you have to pay it later. Again, now mortgage rules. Again, I got into the mortgage in the year 2008 when the crash came in, right? Everybody was saying, oh, you're crazy. How can you got into this business that people are actually going away? Lots of new mortgage rules and all that. But one thing is, again, it's been on the business for so many years, give you the experience and the knowledge that you need to make the right decision. It doesn't matter, like a lot of people are like, oh, it's because the mortgage rules are so tight, that's why we can't buy more homes. There's always options. There's always options. If you're willing to do it, there's always options, right? So again, what I was saying about the regular lenders, they're more strict with these mortgage rules. That's what they're, because the government of Canada is on top of them. But now, like I used to do 90% of my business used to be clean. I was like, you know, I don't want to have to do nothing with bad credit or B lenders. Now it's almost 50-50. A lot of people are going to B lenders. Just to give you an idea, an A lender right now is about 3% for a 5-year mortgage. On a B lender, for 1 year, you could get almost 4%. So it's not much of a difference. And if it's for an investment property that is creating you cash flow, it's worth it. Because you're not, like there's two ways to build equity, right? Every month that you pay in your mortgage or the market that goes up. And it always, right now, the market is going up so high that, you know, I used to have a mortgage for 40 years, I remember. 40 years amortization back in the day. I used to pay like pennies to the principal, right? I was like, oh my goodness, I need to pay this mortgage, right? But the house went up in value so much that who cares? Like you got to focus on what is actually increasing. Should be your focus. It's like the glass of water, right? You want to see it the half empty or the half full, right? And again, the other ones is obviously private lenders. Those are like people like you and I has lots of money, and they want your business. But if I tell you, okay, a private lender is gonna cost you $10,000, and everybody's like, $10,000, that's a lot of money. But I can show you can make 50. Is it worth it? Again, I mean, you can focus on the rate. A lot of people are like, oh, 4, 5, 6%. I'm like, that's crazy. People don't make decisions because they focus so much on the problem, but not on the solution. And like I was saying at the beginning, we're here to give you option, and we give you a solution. Okay, so well, we're here to talk about legal duplexes. So this is an example. These are not exact numbers, so don't call me the exact by the penny. Just wanted to kind of give you a general idea how this works. And these are real examples. Some of you already have gone through this and know exactly how it works. So you'll be like, oh yeah, I did that because I told you so. So anyway, so equity takeout. The rule of thumb with regular lenders, most B lenders as well, are you can refinance your home up to 80% of the actual value. So for example, if you buy your home for $350,000, that's use it as 2010 just as an example. Your mortgage balance as of right now is $290,000, but your present value is $500,000. So that's okay. So $500,000, that's your current value. Now, if you refinance 80% of that value, your new mortgage is going to be $400,000. So if we take the new mortgage minus the mortgage balance, you have available $110,000 on equity that you can take out. Some B lenders will go actually 85%. If we go to a private, we can go 90%. Again, this is just with the most lenders. But again, depending how much you need.